Let's talk about expenses. First expense I want to talk about is auto expense. There is a schedule here that I've used to show how this is determined, the vehicle expenses, and that is page 13 here of your material, vehicle unreimbursed expenses. So there basically are two different ways to compute the amount of your auto expense. Both of them require that you know both your total business miles that you drove during the year and the total miles that you drove your car. So you need to know both. So the question arises, how in the heck do I track, how do I know how many miles I drove? And I was talking to a client just today about this, and I do, I'm an accountant, so I actually do have a little spreadsheet that I keep track of my mileage on. So that certainly is the best, is to show, on this date I went here and this is what I spent. It's a little hard to do now if you didn't do this during the year. A second way to do it is to recreate it from your calendar, which is a pretty good way to do it. So that's pretty easy. The only problem is you have to do all this work now, for one thing. And then secondly, I'm sure there are things that you use your car for business that you forgot about and are not on your calendar, so you will actually under-report probably the mileage that you drove. But that certainly is a good fallback position. Finally, you can just sort of give it the old guess. I know I drove down to LA 3 times during the year, and if you can kind of show that you did, you have receipts down there or something, and if it's for business, then, it's what, 400 miles, or do MapQuest and figure out how far it is and take it that way. So you want to determine, your business use. And business mileage is things, coming here tonight, if you're in business, would be business miles. Certainly going to a photo shoot, going to a gig, going to visit galleries to promote your work, going to deliver your work. Those are all business miles. So anyway, it's a little bit of work, but there also are apps that keep track of this for you. So you can do that. But one way or another, you got to somehow figure out how many business miles you drove during the year. All right, so basically we've determined how many miles we drove total for the year and how many miles we drove for business. So with that number, and that basically on this form is, we've just completed lines 2 and 3. So then there's 2 methods, as I said. One is pretty quick and dirty and easy, and that is what's called the standard mileage rate. And so in this case, he drove 5,500 miles for work during the year. Then you multiply that by the current mileage rate, which in 2018 is 54.5 cents a mile. It's printed on here on the form for you. So you just multiply your total business miles by that number, and then boom, that's your deduction. So that's pretty darn easy. By the way, in addition to just the mileage there, you can add a couple of things more into your deduction, even though you use just a standard mileage rate. And that is, of course, parking. You can always take that, and tolls. Also, a portion of your license you can take, as well as a portion of an interest on your car. This is not for getting your license to drive, but this is the annual registration for your car. You can take a portion of that. So you get that as a deduction. How to do the next method, which is called the actual expenses. And that, then you do add all the operating costs of the vehicle. And that's going to be gas and oil and repairs, tires, insurance. These are all on line 6 through 11. So you get to add those in, and then you multiply those by your business use percentage. And then you can take the higher of the two. However, once you use a method for a car, then you need to use that same method every year for that car. So if the first year you decide it's standard mileage is better for you, then you need to use that rate for as long as you use the car, and vice versa. Now, let me give you some quick and dirties on when one method might be higher than the other. Basically, if you don't drive a car very much, but you have a relatively high business use percentage, maybe you only drive 3,000 miles a year, but it's an expensive car and it has a lot of repairs or something like that, and you use it a lot for business, say over 50%, then probably the actual expenses are going to be better. Conversely, if you have a car that doesn't have a lot of expenses, but you drive it a lot,
for business. You know, some got people traveling, salespeople, real estate agents, they could drive 20,000 miles, and musicians maybe on the road. So in that case, the standard mileage rate usually comes in a lot higher. So those are sort of some rules of thumb, but it's going to, mileage will vary, as they say, when you're buying a car, and, you know, just figure it out either way for yourselves. So commuting expenses are not deductible. So it depends on where your place of business is. If, let's say, you are, again, this is not for waged jobs, this is for your self-employment income. So if you're going out to client sites, then your travel to the client sites, or customers or whatever, is deductible. We're going to get into office and home deduction a little bit later. And it depends on where your office is. You can travel away from your office, but you can't deduct for traveling to your office. So we're going to find in just a little while that if you work out of your home, and your office is in home, then every travel that's for business is going to be business expenses. But if you do have an office, you know, downtown or wherever, and you go into that to work, then that expense is not deductible.
I mean, again, if you're an actor, that assuming you're not getting wages for that, sometimes you get paid as an employee for that. But if it's a 1099 gig, then yes, you can take that as rehearsal. Or musicians, but going to rehearsals certainly is a deduction, business expense. Okay, there's one more expense in this actual expenses that I'm going to get to a little bit later on, and that's called depreciation. So I'm just going to leave that there is a line item. You'll see here line 16, and I'm going to tell you how to compute that a little bit later. Kind of not a related expense, but a related calculation is and we just talked about office and home deduction. So, and the official title of that is business use of home. So let's look at that, how we compute that deduction. And that is reported on Form 8829, which is sheet 11 here in your material. Basically, a couple of definitions or rules that I want to point out to you. You are entitled to the business use of a home if you use a spot in your home exclusively and regularly as your principal place of business. Okay? So what that means is, and they really kind of envision it's like a spare bedroom, you know, that you have, that you work out of. And that works a lot for a lot of people. There are other ways you can use more of your home too for that if you are an artist. Because I've had clients that live in a workspace, and they can use 3/4 of their space for work, you know, if that's their studio. Basically, again, it's exclusively. So that means you can't really use the kitchen table unless you never, you know, eat on that thing, or a dining room table. Even though that might be, you work on that a lot. But if you use it you know, Thanksgiving and whatever, then theoretically you can't take that as a deduction. Bedrooms, you know, a lot of times, you know, it's a bedroom, and then three weekends a year somebody sleeps in the spare bed that's in there or something like that. So that will not disqualify the entire room. You can use a portion of a room as a deduction. So, you know, you take, it's in a corner, you got your desk and all that here, and maybe it's half of the room or a third of the room or whatever. So you can at least take that part of your house as a deduction. But what you can't do is, again, if it's used for other purposes. The way the deduction is computed is first you figure out what the square footage is that you are using for business. And so again, you know, a typical bedroom is going to be somewhere around 125 square feet, 10 by 12 or something like that. And if it's all used for business, you can take 120 square feet. If half of it's for business, you take 60 as your square footage total. So that part is reported on line 1. We're basically coming up to a business use percentage, just like we did for cars. So you then compute whatever the size of your house is or your apartment, and then divide the business use percentage by the total square footage, and then that's the percentage that you can use of your various expenses. The various expenses are listed basically on lines 9 through 22. And those are going to be typically rent, utilities, insurance, maybe you have renter's insurance, cleaning. If somebody comes in and cleans the place, you can take a percentage of that. That's about it. If you don't own your own home, that's pretty much it. If you do own your own home, you won't have rent, but then you're going to have home mortgage interest, and you're going to have property taxes. You're going to have insurance and repairs, as well as cleaning and such. Yes?
That's a good question, and I don't know for a fact. You know, basically, every return is given what's called a DIF score, DIF, which is Determinant Index Factor, which really doesn't tell you very much. But basically, as you, it's deviations from the norm. So the higher the higher your travel expenses are, that gives you a certain amount of points, and for all the various expenses. And so, generally speaking, the more travel expenses you have, the more meals and all that kind of stuff, that's going to give you a higher score. And then the IRS basically will turn around and just audit the highest scores. So I can't give you, numbers, but that's the way it's calculated. Good question while we're on office and home is, I'm sure a lot of people have heard the office and home deduction is a trigger for an audit. And that used to be the case years ago. Now it really isn't. I think they've come to realize a lot of us working on it. And so I would not be concerned about that. And just because you use your house for business, go ahead and take that deduction. So again, remember the IRS doesn't understand artists. And so they're thinking of the spare bedroom. But you might be using your garage as your studio, or you're going to, or like I say, some of the live works are 75% for business. So, and you can have two bedrooms if that's what you use. So, just don't cheat yourself just because you're afraid you're not going to be, you might be audited by the IRS.
Then what we do, we calculate, we basically have added up all of our expenses, and then we just multiply them by our business use percentage, just like the car expense, and that will give you your office and home deduction. Now, there are limitations to this. With autos, you can take it, there are no limitations, assuming you're doing it correctly. With a business use of home, you can't create a loss with this deduction. You can't create a loss with this deduction. So for example, if your Schedule C shows a loss before we even have this deduction, then you can't take a deduction for this deduction currently in this year. It does carry forward so that you can use it against future income, but in this year you can't take that deduction. Or you can use the deduction to bring your net income down to zero, but that's as far as you can go. You can't go below zero with it. But again, you do get to carry it forward. So there's a calculation about, you can sort of follow it through on the form, but basically down in Part 4, it's talking about the carryover of unallowed expenses to 2019. In this instance, there isn't any, but that's where that would go if you have a loss this year. And unfortunately, artists have losses sometimes. So, in addition, we talked about rent as a deduction, and if you're a homeowner, you get to deduct interest, property taxes, and such. In addition, you can also take a part of your what's called depreciation on your residence. So we're about ready to get to depreciation, and I'll tell you how to compute that. But you can take a portion of your house also. By the way, getting back to the employee business expenses, it used to be if your employer mandated you work at home, or for the convenience of your employer, you worked at home, you could take a part of your expenses against that as employee business expenses, but now you can't. For your home office, if you have a loss in the current year without taking this deduction into account, then you can't take this deduction in the current year, but you can carry it forward.
Thank you very much for watching. If you would like to see more videos by California Lawyers for the Arts, please like and subscribe to CLA's YouTube channel so we can provide full-service live streaming programs soon. Our channel will be producing videos that cover all kinds of artistic, entertainment, and intellectual property legal issues. You can also find our videos on Facebook and livestream.com.